The stock market crashes again. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I have my stein of evening coffee and I thought we'd finish the day by having a look at this article from news.com.au written by James Hall. He's alluding to the recent, once in a lifetime, I hope, fall of oil prices and how they're a sign that global stocks will fall further. Now if we jump to the other screen here, we can see the ASX 200. Now, we've had quite a dramatic journey from the highs of over 7,000 right down to 4.5. We shot back up to 5.5 and now we're down to 5.2. Is this the end of a dead cat bounce, everyone? Is it going to continue going further down? Place your bets and let me know your thoughts in the comments below and we'll see where it goes. I'm sure maybe it'll just shoot right back up along with property prices. So let's have a look at this article. Investors who have bought stocks hoping that a recovery in share markets had begun have been delivered a warning shot through the historic collapse in oil prices this week. Leading investment experts say the recent healthy bounce in Australian equities is more aligned with the government spending cash on stimulus packages and not a true reflection of the destructive economic impact still lingering from the illness pandemic. Could it also be, particularly in the US, to do with the QE that's going on there and all the money that's just being created to prop up the economy? When money is created, it will stimulate a particular source point where it's entered and it will expand from there. That's based on a quote from the Cantillon effect. And you can see here, it refers to the change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point and therefore a specific flow path through the economy. Now the date here is from the source I received it from, but the quote, Cantillon's book, is from 1755. So, definitely something that if you're interested in, it is the monthly, probably more than monthly at the moment, book club that we're going through. We're reading his work. Join us on the Discord if you'd like to learn more. But that could be one reason why we're seeing these share market, equity market bubbles. It's why I would argue that is why here in Australia property prices, I'll bring up this chart here, has just shot right up. Because remember, every time you go take a loan, that's money being created. It's not the old thing where they're lending you other people's money. No. You're creating an asset for the bank, which is a mortgage, and they generate the money. They just have to have a certain percentage of reserves. So, could that be explaining why? Since over 50% of the wealth of our nation is in property? Maybe. Could be. It seems to make sense to me. What do you think? So let's go back to this. The demand for oil has fallen so aggressively due to the inaction of economies. The futures index for the commodity recorded its first ever negative reading this week. The bizarre scenario means sellers were paying buyers to take it off their hands because stockpile facilities across the world are nearly full. With cars locked in garages and planes grounded on airstrips, too much oil is being produced to justify its use. About 20 million barrels of excess oil is entering the market every day. The ASX closed flat today after today's trading, but plunged nearly 5% over two sessions on Monday and Tuesday, with investors being warned of more heavy losses to come. The collapse in oil prices tells me that equities have been buoyed predominantly by stimulus. Pepperstone head of research Chris Weston told news.com.au. I can't imagine that's too surprising to anyone who's been following the news. I mean, where's the confidence? Why would why are these businesses reaching all-time high? It's not like they're going to be making more money, is it? So, for the first time, the price of futures, below $1 a barrel. It's been liquidity It's been central bank action. And it's been government support, but the oil market hasn't been a beneficiary of that stimulus. Well, they're about to. Trump's already tweeted out that he's going to support their oil industry in the US. Remember, the US is one of the biggest, or the biggest producer in the world. They still have to import oil. And that's telling you what life would be like if it wasn't for the government. Probably a lot better. Probably a lot better. The natural price discoveries of the market would be in play, and we wouldn't be in this mess. We definitely wouldn't be in this mess. It would have all been resolved 2008. This weakness in commodity prices will make it difficult for energy companies alone to keep their businesses going. Energy companies alone will struggle to keep their businesses open with this destructive weakness in commodity prices. The message the oil market is telling us is that we're not going to come out of this in a V-shaped recovery, he said. I don't know who... Does anyone believe... Well, probably the property spruikers. They're saying it's going to be a V-shaped recovery just to spruik and get the energy going. But does anyone else really take that serious? The idea of ramping up and getting back to our daily lives is just not going to happen. We're going to see some troubling times for some period ahead. There's going to be quite a few companies that go insolvent from these oil levels, which is going to accentuate bad loans and losses in the banking space. Berman Chief Investment Officer Julia Lee said Donald Trump's support for getting businesses back to normal in the United States, despite the country recording more than 2,000 deaths a day, could further weigh on investor sentiment. I don't think the volatility is over yet, especially given the US is looking to open up relatively soon, which means the illness situation could get worse quite quickly before it gets better, she told news.com.au. And this is a once-in-a-century event, is it? Westpac's April market outlook said the health and economic crisis from the illness outbreak was a once-in-a-century event. Is it more than that? No, probably right. Probably 1 in 100 years. And this, I guess this is why businesses aren't planning for that 1 in 100 risk event. The major bank is now expecting the Australian economy to suffer 3 consecutive quarters of retraction. So they are, well, remember, we only need 2 to be in a recession, guys. The report heaps praise, however, on the federal government's fiscal response, revising its expectation for unemployment from 17% down to 9% for the middle of the year due to the eye-watering $130 billion JobKeeper package. Now, that $130 billion, remember, guys, it's not free money. We're all going to have to work it off. Okay? This is all time we need to do in the salt mines. All money the government needs to take off people in the future. If you're an MMT proponent, it's more taxation the government needs to do to reduce the heat in the economy. But the positive sentiment drawing from the Morrison government's willingness to splash cash won't last, the reporter warned. Australian stocks have surged in value this week and closed nearly 3.5% higher at the close of trade on Thursday, but the heavy losses inflicted since mid-February will resume. Markets are currently buoyed by government's stimulus package, according to the report from the Westpac's chief economist, Bill Evans. Well, we jump back to this chart, guys. I mean, it looks like a dead cat bounce. I keep pressing the wrong button. It looks like a dead cat bounce. And let's just look that up in Google, guys, for those of you that don't know what I mean when I'm saying that. Bouncy, dead cat bounce. Here we go. We'll bring up some images. There you go. You've got your dead cat. It's bouncing, going up. Dead cat bouncing, going up. I like that one. That's a good one. I've got nothing against cats. I mean, I think dogs are real pets. Cats are just, animals that eat your food. But, there you go. Dead cat pounce. 2 dead cat bounces. It's all to do with the psychology of the market, everyone. Do you think that's what Australia is heading for right now? Do you think that's where the ASX is going? Let's jump back. We'll go 10 years. We'll have a look over to the... we'll go 25 years. We'll go to the GFC here. That could be a dead cat bounce, couldn't it? Right here, then it went back down. Perhaps another one. So we'll go into normal. Oh, and boom. Well, we'll have to see, guys. We will have to see. Remember, history, well, it doesn't repeat. But human psychology never changes. No matter how much smarter we think we are, we still fall for all the same tricks and problems that we have since all of history. So we'll have to see. Anyway, guys, thank you all for watching. And if you are a architect watching this, or a draftsperson or a student, I actually want to take this opportunity to plug my other channel. I'll jump over here. This is Heise Tutorials, and this is the first channel I ever made, actually looking at YouTube. And here you can see I've got a whole series of architecture, drafting, Rivet tutorials, point clouds, Blender, that type of thing. If you're interested, please check it out, subscribe, and watch some of the content. It's essentially when I'm doing something like tonight after this, I'm going to do a quick little video of a trick I do in Rivet that I find saves me a lot of time. And I thought that would just be, useful for people who are working, particularly if you're working from home. Anyway, guys, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you'd like to support the channel, there are a few ways you can. You can join on YouTube or on Patreon. You can support us via affiliate links from Amazon or eBay, or Independent Reserve and Kucoin. You can send us gold using Gold Pass, buy our merch from Teespring or HeiseSays, and we also can receive PayPal donations. Thanks, everyone. Have a great night, and I will see you all tomorrow. Bye for now.